Apple Inc. was created on April 1st, 1976 by Steve Wozniak and Steve Jobs, who both shared a vision of creating a more user-friendly computer that was small enough to use in homes and offices. In 1980, Apple's mission statement was to make a contribution to the world by making tools for the mind that advanced humankind. Since 1980, Apple has revolutionized the computer industry and continues to be innovative in product development.
Apple strategic goals. One of Apple's primary strategic goals is developing new products. Apple has been developing new products and improving on existing products since the very beginning. This is the reason why Apple has continued to maintain a competitive edge over their competitors who develop similar products as well. Apple understands that without developing products that appeal to the masses, profits will eventually begin to decrease, and the customer base will decrease as well. This is why strategic goals are heavily focused on currently by Apple, which is product development. The other strategic goal that Apple is currently focused on is market development. Apple understands that without penetrating new markets, they will not be able to sell their products and maximize profits. Apple already has a competitive edge in the United States and most of Europe. However, they do realize that they do need to advertise and take control of markets in Asia where they can maximize profits and sell their products as well. This is why both product development and market development are one of Apple's primary strategic goals at the moment. There are other strategic goals that Apple is heavily focused on, but these two are currently the most important.
Apple's financial goals. Apple is one of the most profitable companies of all time, and as a result benefits from billions of dollars in cash reserves. As of April 26, 2016, Apple reported having $21.5 billion in cash and cash equivalents. Apple's financial goals regarding this stockpile of cash involve a short-term goal of providing excess capital to its shareholders and a long-term goal of increasing its innovation in its products and services. In its April 2016 press and earnings release, Apple's board of directors approved a $50 billion increase to Apple's shareholder capital return program, mainly attributed to a stock repurchase program that increased from $140 billion to $175 billion. The increase focused by the company's board of directors on redistributing its success to its shareholders highlights its first and short-term financial objective, reinvestment in its shareholders. In its 10-K report filed with the SEC in September of 2015, Apple listed the following risk factors to its financial growth. Global markets for the company's products and services are highly competitive and subject to rapid technological change, and the company may be unable to compete effectively in these markets. And to remain competitive and stimulate customer demand, the company must successfully manage frequent product introductions and transitions. The identification of financial risk involving a stagnant consumer product line highlights the second and long-term financial goal of Apple, reinvest in itself. Apple's entire success hinges on its financial performance, and increasing its financial performance allows Apple to successfully accomplish both its short and long-term financial goals of increasing its investment in its shareholders and increasing its investment in itself.
Apple is a very dynamic company that utilizes multiple markets and has a great presence in the market share of each. With different technology markets, Apple ranks in different spots among the top technology companies out there. Let's take a look at Apple's smartphone market share. They are very competitive with others, and they currently hold 40% in the market in the U.S., which is a decrease since 2014 due to a more competitive industry, but they still sold a remarkable 75 million iPhones worldwide in the first quarter of 2015, and they still lead the nation in smartphone sales. Along with Apple's smartphone is their software platform, called iOS, which piggybacks off of their OS and OS X software. This platform lifted their iPhone sales incredibly due to the ease of use and their innovative approach. Apple also uses OS for their computers and tablets, which Morgan will be speaking about a little bit later. Looking at this pie chart, Apple's software is not the most popular, but that is because it can only be used on their products, compared to Microsoft Windows operating system, which can be installed on any computer. Apple currently holds 6.68% between their two desktop platforms. Apple will continue to gain traction using their iOS platform for their iPhones and tablets.
According to the latest research data from Gother and IDC, as you can see from the picture below, Apple continued to grow overall Mac market share during the March quarters, has most leading Windows PC markets suffered from significant setbacks. Apple's total share of the PC market grew 7.4% in the first quarter of this year. On the other side of things, the market leader Lenovo saw sales slide 85% year over year to 12.1 million units. Now, looking at the PC market solely in the United States, we can see that HP retained its lead with a 28.1% share, while Dell holds second position with a 23.9% share. Apple, which continues to buck the trend of a wearing down consumer PC market, managed to retake third place with a 12.7% share over the holiday season.